G'day and welcome to the Morgans Edward Street Weekly Wrap for the first week of August. After our market took a well-earned breather in July, we are finally entering reporting season, which will run until the end of this month. Reporting season is likely to bring some volatility with companies reporting their earnings, and this will be a strong test to see where our market stands. For more, I'll pass you over to Tristan.
Thanks, Cameron. It's been a busy week in global markets, with US markets leading the charge. The Dow has been volatile, with trade fears doing most of the damage. The tech-heavy Nasdaq has been stronger, with Apple posting record highs and electric car maker Tesla surging after their quarterly update. The Federal Open Market Committee voted to keep its benchmark interest rate at between 1.75 and 2%. This policy remains accommodative, whilst inflation tracks towards their stated goal of 2%, and is further confirmed by the central bank stating that economic activity has been rising at a strong rate. US and China trade tensions have led the European bourses lower, as concerns voiced by industrial stalwarts such as Volkswagen spooked markets. Base metals were sold down across the board, as the threat of industrial action in Escondida in Chile did little to appease concerns of a slowdown in demand. A stronger US dollar kept the Australian dollar pinned near two-year lows, buying 74.06 US cents. Oil has given up some of its recent gains as official inventory data showed an unexpected build in US stockpiles. We're about to start the craziness that is reporting season, so to hear what looks good and why, I'll pass back to Cameron for his views.
Thanks, Tristan. The stock I'm covering today is a stock you all would have heard of, and that is Apple, which is listed on the Nasdaq under ticker code AAPL.NAS. Whilst we all know the company and what they do, there are a few standout points that I wanted to raise. Firstly, this stock trades on a PE of 16 times earnings, roughly in line with our ASX 200. In comparison, the stock is forecasted to grow at over 20% growth for this financial year. My second point is Apple is a beast. Apple overnight has reached a $1 trillion market cap, which has made this the first US publicly listed company in history. With this price tag, we should note that they have over $200 billion in cash, which should also be considered with my first point on valuations. And my third point is the tailwinds behind the technology thematic. I want to be the first to say that we are more dependent than ever on mobile phones and Mac computers, and I don't see this theme changing anytime soon. In our everyday lives, whether it's checking emails for work, ordering takeout for dinner, or watching Netflix, this all requires the use of this technology. Even socialising is now primarily done through electronic means with Facebook, Instagram and Tinder. It's unfortunate, but it's the truth. Put simply, I believe this company is big and is only set to get bigger. This is an international business with significant exposure to the US, Europe, China and Japan, which is increasing their offering and services provided. Apple this week provided strong numbers, including a $100 billion buyback, and I believe you can invest in this name for the longer term. Cheers, Tristan.
Thanks, Cameron. Well, that wraps up another week. IPOs and rights issues remain light on the ground as companies go into blackout coming into reporting season. I'd expect to hear more from this area over the next couple of weeks or so. Please remember that our comments in the video are general in nature, and please speak to your Edward Street advisor if you wish to know if any of the stock recommendations suit your personal needs and objectives. See you next week.